Okay, everybody, welcome to my market analysis for the coming week for August 19th to 26, 2024 for an epic week of trading ahead. Just to remind you, August 19th ending on August 26th. This is a monthly options expiration week, so just get ready for a lot of volatility and wild swings in price movements. And topic for today is, yes, the epic bullish market action continues, and is the bottom in? And that's the question that I want to answer, and we'll get started right now. It's about Sunday. It's about August the 18th, 2024. It's 12:50 a.m., not p.m., a.m. as I make this. All right, here's the disclaimer. Please pause it, read it. If you agree, please move forward. And of course, my shameless plug on x.com/galaxy.market, where I post all the intraday commentaries, analysis, and reposting of some significant market leaders that I follow that I think is important, and all the breaking news are right here. All right, so we talked about the fear and greed indicator from last week, and on August 9th, we were at 24 at extreme fear. And, guys, I got to admit, this rally is extending into levels that I didn't expect, but then, markets are going to do what it's going to do. Is the bottom in? And that's the question that I'm going to be answering. However, one of the things is that August 16th, ending on this Friday, yes, we came off of the extreme fear, but we're still in this fearful range. And that's really, really odd, considering the fact that, everybody's out there stating, the bull market is here, and the people that are calling for stock market crash or correction is wrong. And, we just got to roll with the punches with what the market's telling you. There is fear in the markets, okay? It's exacerbated a couple of weeks ago, and now it is coming off, but we're still in the fearful range. And, the old saying that the markets will continue to climb the wall of worry, and that is the question. Are we climbing the wall of worry, or is this being reloaded for the next leg down? That is the bipolar questions that we need to answer at the moment. Okay, so we do know that in any type of markets, especially in a corrected markets or a bear market, I'm not saying we're in a bear market yet. That is far from the truth, but we may be, starting into one, because all the indicators and economic numbers that are coming out, if you look at even the retail sales numbers, they're basically they're basically revising the previous number like it never happened to make it look like the previous number looks like there's a gain. And we went over that on the Twitter, and we've been posting it in our group. Guys, the numbers are not real. Okay, but the fact of the matter is that we got to do what the algos and the markets are going to do. And at the same time, the distribution continues as we start to have these rip your face off rallies. And I'm going to be making a case that while we may go a little bit higher on Monday, that the market top for this relief rally is going to be in. Markets do not go down in a straight line. All right, so I've talked about climbing the wall of worry, or is it setting up for the next leg down? Let me show you what I think of all this. Here's what I think. I think since the BLJ came in and verbally intervened, they didn't do anything about cutting rates and everything. That helped to normalize some of the, the yen carry trade that's going on, and we'll go over that in a bit. I do believe that the market now thinks, and they don't really care about inflation anymore because they think the inflation is beat. And by far not the case. If you're an average American trying to survive on gasoline prices and food, and consumer demand destruction is continuing, right? If you haven't looked at the Home Depot's earnings report, okay, Home Depot's in big trouble. The home improvement market is dead because of the high interest rates. And, Fed has not committed to any type of rate cuts. And I do believe when a rate cut comes and when the Fed pivot happens, it may be shortly. Okay, we'll go over historically what happens then, okay? But what happens after the Fed pivots in history, okay? The market's pricing in at least 5 Fed rate cuts based on the movement of the markets in the last couple of weeks. It's been a rip-your-face-off rally. Yeah, I gotta admit, I mean, I didn't think it would go this high, but it's still within the realm. I mean, it could retrace 100% of this sell-off that's occurred, and still, um, the bearish context of the stock market correction still remains. Okay, we're in August. Okay, and I told you that the first leg down is not going to be, it'll be sharp, quick, and then we're going to have these rip your face off rallies that you can load into. So let me make a case for that. More importantly, you saw this chart, and again, this is from ElliottWave.com, and they made this back in 2022. And the question obviously was, is the Fed going to pivot in 2023, right? And this is how much intervention and distortion that's been put into the market with all the money printing and all the falsehoods that are coming out of our alphabet agencies, especially BLS. None of those numbers are real. I mean, this is what Soviet Union did before they collapsed, right? And we're following in the same steps. I'm not going to try to get political. I think, I got to watch what I say, but I mean, it's the truth. I mean, what I'm speaking here is that if you guys think that the jobless claims numbers or retail numbers or CPI and PPIs are not rigged, then I've got a bridge to sell you nowhere, okay? And you'll still buy it. But regardless, they were talking about the Fed pivot in 2023, and now it is 2024. We're at the last, quarter, 3/4 of the year. I mean, the year is almost over. August is almost over. I mean, we have the monthly options expirations this week. When is the Fed going to pivot? But more importantly, when the Fed pivots, what happens immediately after? Okay, I mean, we're talking about within weeks. Okay, these are stifling numbers. One thing that nobody seems to be really paying attention to is that since these pivot numbers, we have gone, pretty much parabolic higher. Okay, from the last Fed pivot, we went about to here before the Fed pivoted. Okay. And then there's a short period in between. And then we have this long period. We're beginning to come in 2019. And then we just went straight up, right? We're somewhere here, okay? Probably went straight up. And so the question is, when the Fed pivots, how much of a decline are we going to have? Are we going to have one of these 58, 51% variety? And I think that's probably what's going to happen. But it won't happen in a straight line. And that's the message that I'm trying to get to everybody. Now, I talked about the JPY US dollar yield, and this is from the previous week's video. I guess it wasn't that popular. Not many people watched it. It's probably because people are getting sick and tired of me thinking that I'm telling you that the market crash is going to continue and all this other stuff. My message was to short the rips. The bounces are going to happen. It does not go down in a straight line, folks. And this is something that you really need to pay attention to, is that this is the intervention that we're talking about from last week. And we continue to have intervention, and there is this opposite reaction, right, as we come down. The key level that I think that we need to pay attention to is this 50 SMA right here. If we come down a little bit further, if we find the bounce from here, then we're going to top off, maybe right up into make a lower high, or maybe the same high and make a double top into this situation and then start coming back down. The areas that we're going to be concerned about is, are we going to break these levels? And I think that it's very possible for us to come to here and then have you rip your face off rally. And it's not going to go up in a straight line, but I think that there's going to be a more powerful rally after we pull back that's going to be happening here. And that's something that we need to pay attention to, that this is not the rally that you want to be buying into, even though it seems like it. I've been saying for a while, when this relief rallies come, it's always going to seem like the bottom is in. And let me make a case for you on that. But this is the metrics that you want to see and pay attention to. We want to see that the job owning by Bank of Japan, they're screwed either way. If they cut or raise rates, it doesn't really matter for them. They are the model for which I keep calling about the currency wars. The race to zero is going to happen, and it's going to steepen. So let's get into our technical analysis and look at something that I think is important. One thing I'm going to say is my trusty McClellan summation index is either broken or it's basically divergent. And, this thing has got me scratching my head a little bit. It's basically forming this bullish signal once more. And I do know that because of all the distortions in the money printing and all the rigging job of using these magnificent sevens to basically hold up the market and to engineer these short squeezes, especially in the small caps, folks. All right. Is this inverted? And does it remain inverted or have we reverted? And, I made the mistake about a week ago in thinking that, hey, because of this flush that, maybe the advanced decliners and the breadth indicator, that's what McClellan Summation Index is. It's a longer term breadth indicator. And the way I use it is to look for market turns and major events. However, right now it's turned bullish again, and generally it's been a divergent situation. And so the question that I need to ask that I don't have answers to right now is we have divergences. As this is going up, is the market signaling that it is this relief rally is almost over? We have MACD crossover, looks bullish. All right. But it's been completely divergent or the opposite. Okay. This has not happened since 2008 financial crisis. And so I need you to pay attention to this. The other thing is why I don't think this market sell-off was one and done after 3 or 4 days is the fact that we only hit 0.975 on our put-to-call ratio. And if it got super bearish and the conditions became extreme, we'd be looking at 1.5 or even higher. I've seen as high as 3.0, folks. All right. And so that's pretty much what I'm looking at. You can see that we are heading down towards this trend line that we've drawn from the lows in the March of this year. We've kind of breached over that. The question is the put-to-call ratio going to fall more, or are we going to start bouncing off of these levels after breaking up into here and then moving higher? And this is something that we need to note, and this is why I do not think the flush isn't in yet. Okay, this looks like to me a relief rally that's just gone a lot higher than our technical analysis. And market's job is to confound everybody. And but at the same time, we are cognizant enough to know that these rip your face off rallies are going to come, and we're still of the mindset to short these rips whenever there may be. And there's two strategies to that. You can start building small positions, and then play the intraday bounces or buy hedges. Or wait for the absolute top and then wait for confirmation and then get in and stay in cash. Okay, those are two of the strategies a lot of our traders are using. Yes, we've taken some hits picking tops here because it's gone through all these critical top levels, and yet despite breaching those, they still remain in effect. And our current level, which we'll talk about in our analysis, is very, very important this coming week. And then let's see if anything transpires as a result of this monthly options expiration. Now, I've been talking about gold for a while, and I've been saying that the gold is ready to form this fourth phase of the parabolic rise. Here's phase 1, phase 2, phase 3, and then we had a little pullback, and this is like the phase 1 downturn. It didn't last. We have breached over here. If it gets parabolic, that would start the phase 4. And then I've been saying that to watch gold's action. Okay, don't worry about this relief rally that's engineered. That's basically, the big boys want you to become an exit liquidity. I believe that. Okay, and as you dip buyers are buying and saying that, ridiculing people that are basically looking at these technicals and looking at these macroeconomic indicators and saying that no, this is not the bottom. Okay, look at what gold is telling you. Gold is telling you something is coming up again, just like it did right before the sell-off. Okay, gold moved, and now you can say that that's related to what Kamala Harris is communistic, or basically, she is. I mean, let's call her for what she is. She's a Bolshevik communist, right? So she thinks that price fixing and I don't know, and gouging prices for the betterment of all is going to be a good thing. It creates more social distortion. Okay, and that's what happens. But watch gold. Okay, let's look at VIX. the VIX, and this is why I don't think it's over, had a historic jump and then an epic crash down into this level. Now, these are the levels that we need to be looking at. Is it going to go back down into this area, or are we going to bounce at this blue level, chop around here, and then start moving higher? And I think that's probably what it's setting up for. I've made a case on both X.com and in my group that the bottom is likely in, starting around like 16, and we've been slowly adding into our VIX call positions, okay? Now, let's look at SPY because that's all that matters. We are basically still have divergences, I think, forming on the RSI as we're losing momentum. And we're at critical levels here, folks. Can we pop to 562? I suppose we can. And, because it's blown through all my critical levels. And right now, it is confounding. However, the volume has been very lackluster on this bounce, and we're kind of declining on that last Friday on these two gigantic candles. I mean, these type of candles exist during relief rallies, folks. Okay, that's what I want to talk about. And this is the level that we need to look at, 564.31, 554.31. Okay, 554.31. And I'm going to tell you right now, the 550.71 is going to be absolutely critical. If you close a day below that level, you can probably start looking for potential short entries if you haven't already started nibbling on them already. Okay, let's go look at SPY on the weekly. And again, we are coming right up into this critical levels. Now, everybody thinks we're going to go higher. If we do go higher, this orange box is likely the target. Okay, and it very well may be. I mean, it's just like nothing shocks me anymore. But this market has blown through my previous levels that I thought maybe would break below here off of this kind of a triangle formation. We've broken out. Now everybody's saying, hey, look, you know what? This is a sign that the bottom is in, and it's an election year and everything's going to go higher. And not so fast, because I think the market is, again, trying to price in a Kamala Harris presidency. That's what some people are saying. But I think that market is actually warning about a Trump presidency win. And basically when that happens, the markets should rally off of a Trump win. He's going to be much more market friendly, I believe. So I think that's what's happening. I may be wrong, but that's my conjecture. I don't have any horse in the race. I think both candidates are terrible. I think we don't really have a choice. They're selected. But the fact of the matter is that you have this situation that's coming up, and it bears watching. What's going to happen this week? Everybody thinks we're going higher, and in that type of consensus now, at that point, the market is generally wrong. Okay? So let's look at QQQ real quick. I think QQQ can maybe have, if it doesn't fail at this 10 EMA, this is the likely target maybe on Monday. Okay, I've already said that the QQQ could bounce from here, and that's exactly what I have. And the candles look awfully similar because that's exactly what it is. This rally is engineered. Okay. Let's go into some charts here. I've been talking about Lululemon as being at a critical level, no matter what happens to the market, that it should bottom shortly. Pay attention to this candles right here. All right. I haven't given up on it. And look at the PPO ADX, it's super bullish. Okay. And, if I'm completely wrong and this market continues to go higher and the bottom is in, this is the stock that you need to be looking at. Okay. For a 10x plus trades. I've been talking about Palantir. I've warned you that the bottom was in around these levels, and last week it basically went up higher. I believe that this 33 level is going to be critical, but I think it has a lot more room to move higher. It's not going to go up in a straight line, but keep an eye on this. I'm super bullish on Palantir. Okay. Now the other thing we want to talk about on Tesla is the following. Okay, let me get out of here. Tesla is lacking momentum as it's moving higher. Here's the downtrend line. This is critical. If we can break above there, yes, we're going to hit about 230s all the way up into the 246. If it gets here, this is an automatic short for me. Okay, volume's rising a little bit. There is some signs that may actually happen. We had the MACD crossover happening. Okay, question is, are we going to fail right over here? PPOADX is bullish. So I think realistically for Tesla, I think since we didn't fail off from this level last week, and I thought we would maybe tag 192 to 185 before moving higher, it doesn't matter because, Tesla is the leading market indicator, and it's telling us that it's at a critical point. It's either going to move higher, or it's going to move lower. I think there's still room to go up to about 230 since it didn't fall down last week. Okay, and this rally has been quite sharp. Let's talk about NVIDIA. NVIDIA is just basically bullish as hell because you should have known when Nancy Pelosi bought those on insider information. I'm pretty sure of it. She's the greatest stock trader of 21st century. Okay, and while the Americans are suffering, our congressmen and senators are making it rich on the committees that they serve. So she bought at the bottom right here. The calls. Man, she must be the greatest stock trader in the world. But, however, so we've been going higher. These are critical levels that we need to look at. Okay, 130. Can it crack 130? We'll be watching at this point. Okay, I think that may be a good point to put some pilot positions out. I think this rally will be coming to an end shortly. I haven't talked about Apple in a long time. Okay, Apple is the stock market, folks. Again, rip your face off rally off of the bottom. Everybody thought it was going to go down a little bit more, including me. The question now is it going to be able to get above these levels right here? Is it going to fill the gap up here? All right. And still, what we have is a RSI that is losing momentum. I mean, at this type of a rally, we should be seeing a very, very strong relative strength index, and that just hasn't happened. We do have some bullish cross on the MACD. Question is that going to last going forward? I see some negative divergences forming, so keep an eye on Apple. We do have PPOADX, however, that is bullish right now, okay? And that foretold all of these things that were coming. And, like I said, we correctly called the sell-off, and we correctly got out. It's just that we're now beginning to nibble at the wrong entry points because market is blowing through them. It doesn't mean we're going to be wrong for a long time. This is why you got to use smaller positions and pilot positions. But my thesis still remains. Okay, I think we're going lower after this relief rally is over. And then the other thing is AutoZone. Okay, it teased us. I thought it was going to break this ADMA. Instead, it went right back up into here, and so making this having a resistance level right here. If we do not get above, I mean, all-time highs right up to here. Okay, 32.63. We're not too far away. Is it going to make a lower high and then start moving down into these volatility zones? Okay, that's what we're going to be asking. Bottom line, folks, is, we have consumer demand destruction, okay, and that's continuing, okay? And if you look at the automakers and just about everywhere that's consumer related, okay, they have scaled back. We are broke, okay? We are tapped out on inflation, even though everybody's telling you inflation isn't bad. Well, go fill up your car, and if your wages haven't gone up in the last couple of years to keep up with the inflation, or the preponderances of job cuts, and then yet, the Fed comes out and says the jobs market is still strong, I don't know what to say at this point, right? Recession is coming, folks, okay? And I don't care if people say that recession is not coming and that somehow Fed's going to save the world. Fed doesn't know what they're doing, and they have always created recessions. And when the Fed starts to cut rates, be careful, folks, okay? That's when these big 58% corrections in a matter of 2 to 3 weeks are going to happen. What happened a couple of weeks ago is just the turn of the market. It was just a warning shot. This rally that's happening is just a reflexive dead cat bounce, folks. Now, here's the thing. Key levels to watch this week is SPY 550.71. We need to close below that or the market will continue to melt up higher. We do have monthly options expiration coming out this week. So watch for that, okay? Here's keys to next week in a summary. Okay, markets do not go down in a straight line. We are going to have these rip your face rallies. Epic melt up, rip your face off rally continued this week. We may have some more of that early on in the week. These processes are normal during market corrections. Yes, they blew past some of my levels. Okay, and I admit that. And but this is how distorted the markets are right now. McClellan summation has been divergent with the general market direction, and it continues to be so. And, this has me scratching my head. Like I said, I haven't been this confused about this indicator since 2008 financial crisis. Short the rips. Know your levels. SPY 550.71 is critical. We need to close below that on a closing basis, on a daily basis. Watch gold, okay? Gold is going parabolic, okay? It's not because of Kamala Harris, okay? It's telling you there is some dislocative, maybe a black swan event that may be coming, maybe not. Maybe for some miracle, the market and the gold market has decided to couple together, okay? Okay, watch list. I still love Palantir. NVIDIA, Apple, Amazon, Tesla probably have a little bit more upside to go. Okay, but I'd be looking for those to short, not to later. Okay, but like I said, NVIDIA looks like somehow Nancy Pelosi knew. She knew. This shows you how dislocated the market is. Okay. Costco, ASIO, Home Depot, SPY, VIX, and QQQ. All right. Those are what we're looking at. Patience is key. Know your pivot levels. You got to watch that VIX. Okay. VIX went from 64 now down into the 14 range in a matter of a week. All right. That type of excessive movements in the volatility market is telling you that this volatility is not over yet. Okay, bottom's not yet in. The big rally is to come after we take out the 49.68 to 48.85 on ES, which correlates to about 486 to 464 on SPY. I'm not saying it's going to happen next week, okay, but we're getting close, okay? Embrace these bounces. These intraday, and if you are nimble, play the intraday bounces or put on a hedge. Okay, but the best route of action that we're going to be taking is we're going to be nibbling short slowly and building on our short positions, keeping powder dry, which is our cash. I call cash powder, and be ready for anything that may come our way. Okay, patience is key. Okay, do not become exit liquidity. All right, so this ends my presentation. Remember to follow us at Galaxy Doc Market. Like us, share us, comment, good or bad. I like it all. I do appreciate your commentaries. And I thank you for subscribing. Share, obviously. And if you want to learn more about how to work with me, Coach Brandon at protonmail.com and schedule a consultation. Otherwise, let's get some alpha. Be careful out there. All right. We may go up a little bit higher, but know those critical levels that we talked about. All right. This is a hard market. But this is the rip is not the end all be all. There is more pain to come. Okay. I'll talk to you later. Bye-bye.